Okay, so welcome to lesson 17. In this particular lesson, we'll be looking at order block, okay, which is a little more specific to where we'll be taking our trades. Okay. With order flow, we are looking at the general area of interest. Okay. But with order block, we are looking at specific areas. So in this lesson, we will be looking at how we can identify those specific areas that we refer to as order blocks in the market. But first of all, what is order block? Okay, so order blocks are specific candlesticks where we look to take a buy or a sell in the market based on certain confirmation. Okay, so that is order block. So let's see how we can identify order blocks. First, I will show you some demonstrations, illustration on this from this image I put here, and then after that, we will look at it on the live chat. Okay, then we'll be done for today. I'll upload lesson 16 uh, this evening before I sleep, and then I'll upload lesson 17 tomorrow. All right. So when looking for order blocks, we look for the last, in a bullish trend, we look for the last selling candle before the bullish move. And then in the bearish market, we look for the last buying candle before the selling move. But candle color doesn't matter. I'll show you why. Now, if we want to mark, let me just show you this. So let's say this year we are moving downwards. Okay, so if we were marking our, how do you call it, order flow, this entire area would have been our interest. Okay, this entire area here would have been our order flow area. But this time we are looking at order block. So with order block, we said the last buying, this bullish move. So the last selling candle before the buy. So in this case, though this candle here is black, showing a bearish candle, it doesn't mean it is the last selling candle. Why? Because this guy here, let me use a line. Let me use a line. Okay, let me use this arrow. So you see this area here. Okay, I think I have to. Sorry. Let me remove this box. So you can see from here. Let me change the size. Let's use it like that. All I want to say is that you see the low of this black candle was taken by the wick of this guy. So there was a sell to the downside before we closed bullish. This is the reason why I taught you guys about the formation of candlesticks. So we are looking that price will take liquidity. So the candlesticks that takes the liquidity of the previous candle before the move. is what we'll be looking at as our order block. So in this case, this blue guy here, blue candle here, is our order block. Now, this alone, taking the low of the previous candle alone, is not enough to be considered as order block. See, if there is something you should understand, the order flow I even thought is not the most important thing here. By identifying the order block, the order flow is to give you the idea of how market is moving, but the order block is the area we are interested in to make our entries. So it is where you have to pay close attention to, honestly. Okay, so now we remember that I taught what we call imbalance. So imbalance is another thing you consider when selecting an order block. So after you see market take this low, we know that this area is a high probability for reversal the next time price gets here. But then we know also that we need to have an imbalance that makes the whole this thing high probability area. So if you check, there is imbalance between this guy here. Come in, please. There is an imbalance. Let me move this guy between here. Oh, between this guy here and this guy. Okay, from our imbalance lesson that we took some week, I think, well, last week or so. Okay, so there's this gap between this candle and this candle. That is the imbalance. So this imbalance qualifies this guy alongside with it taking the liquidity at this side. When we go to the live chart, you understand better. Okay, so these two things allow us to qualify this as a valid order block. Now, I will explain something later, okay, about if maybe this guy was mitigated, what candlestick will we use next as order block. When we come here, I will clarify that. All right, so here, if we see this next candle didn't take the low of this, so it's not a valid candlestick to consider as an order block. Now, this is a bullish trend. So despite the fact that this black candle took the high of this area, we can mark it as a bearish order block because we are in a bullish trend. So you don't counter trade anyhow. So we would rather wait and see, has this guy taken the low of this guy? Okay, so this one didn't, but this did took the low of this guy here. Okay, so this becomes a valid order block per this. But then the second thing is we need to know if there is imbalance, and we have an imbalance over here. Okay, so this is an imbalance. So this area between here to here, between this and this, we have imbalance here. So that makes this guy a valid order block. So those of you that trades ICT, that marks order blocks as your areas of entry, this is how you can identify valid order blocks, and it will enhance your ICT winning percentage if you are using the ICT method of trading. Okay, now this guy here has not taken any low. This guy is an order block, but it's an invalid order block. Why? Because this guy didn't take the low of this previous candlesticks. Even though there is an imbalance, he didn't take the low. And as long as he didn't take the low of the previous candlesticks, we are not considering it as a valid order block. All right. So this is not, this guy here is not a valid order block. Okay. All right. Let me see. Okay, let's leave it like that. Let's come to this side. Okay. So here as you can see here, we have our last selling momentum here as our order flow, but we want our order block. This guy took the low here of this candlestick, so it means we are looking to what? To mark our order block here. Good. Now if we mark this order block, all right, we can mark this order block, all right, but it is not a valid order block. Why? Because this candlestick mitigates the high of this candlestick. Let me move this guy away. You can see this mitigated this. So this is not a valid order block, but rather you shift the order block from this guy to this guy. Why? Because the low has already been taken by this guy, and the imbalance area is between this guy and this guy. So the whole area here is still valid, but it is only valid for these candlesticks and not this guy because it has been mitigated. All right. And we'll look at these things more under our entry concept. Okay. So here, this is our valid order block. Over here, this is our valid order block, but because price has mitigated over here, we will, even if we mark this guy here as order block, it will still be an invalid order block. Okay, guys. All right. Then let's look at the next one. Over here, we have this, but it's not a valid pullback because it didn't take out the low here. So it's not a valid pullback. So this cannot be an order block. It will be an invalid order block. And this one over here also didn't take the low of this guy. So we can't use it either as an order block. And it is vice versa when we are looking at the bearish market. So let's quickly look at a few examples on the live chart. Then we can call it a day. So let me share the live chart with you, and then we move on from there. Okay. Please, can you see my screen? Let me know before I proceed.
No, sir.
Okay. Can you see it now?
Yes, sir.
Yes, sir. All right.
Yes.
Okay. All right, so let's proceed. Let me remove the previous. Okay, you let them be there. Let them be there. So here, let's see. This is our order flow area. Yeah, as you can see, this red candle took the high. Don't know if you guys can see it well. So let me increase this. See, it took the high of this guy. But we are in bearish move. In bearish move, we are looking at the highs. Okay. In bullish move, we are looking at the lows. Right. So took liquidity. So this guy here is our valid order block. So you mark this guy, right? And as we can see, price came back to us to mitigate it before going down. Then this is our next order flow. So I can take this guy off now. So as I said, when you mark the order flow, it helps you to easily identify your order blocks. So here, let's see if this guy has truly broken or is an equal high. So over here, I think it broke it a little. Yeah. So that makes it a valid order block. So as you can see, the candle color doesn't matter over here because this guy wicked above this. So this becomes the last buying momentum before the fall. All right, that's one thing you need to understand. From the formation of candlesticks that we learned about, the color of the candle doesn't matter that much. It is the internal structural formation of the candlestick that matters. So this becomes our valid order block. Sorry, there is something I did here. None of you even corrected me. Over here, this one here is not a valid. The first one we located is not a valid order block. Despite price took the high of this green candle over here, this is not a valid order block. The reason being that there is no imbalance. Okay, here all has been balanced out. This guy mitigated the weak of this guy over here. So this zone here is not a valid order block, so we can trade it. All right, so we look at the next one, which is this one. Okay, first of all, it has taken the high of the green. The next thing we need to do is, does it have an imbalance? Do we have a valid imbalance? Yes, we do, because the wick of this is here and the high of that is the low here, the high here. So we have this imbalance between these two areas over here. So this can be used as a valid order block. Okay, it can be used. Yeah, Barry, you raise your hand as a valid order block.
Good evening, sir.
Yeah.
Please, can I ask? I have a question, sir.
Yeah, go on.
The order block, is it the one you said is not a valid order block?
Yeah.
So does that mean that the order block leads to imbalance?
Uh, did you watch the first explanation I gave before coming to the live chat?
So I just got the middle. So
Okay, that's right. Don't worry, I'm recording the distance, so if you watch the beginning, you understand.
okay, sir.
Yeah,
Thank you.
you're welcome. All right, so over here, the imbalance that we have between this and this validates this order block. Okay, so the next time price returns into the order block, then we can make an entry. Okay, all right, now we push down. This is our next valid order flow. So let's see if we will get a valid order block from there. Now, this is our last buying momentum before, that is the buying candle before the sell. And we can see it took, I can delete this now. Can see that it took the high of this candle, okay? And then we have this downwards movement. The next thing we look for is, do we have an imbalance? So this is in the shadow of this. So in determining the imbalance, you determine it. Yeah, Barry, you raise your hand.
Yes,
You
sir.
have a
Please, let's assume that we are having a live market.
okay.
So, and the first candle that formed, is it that it is after it formed that you get to know that this is an imbalance, or before the formation you get to know that it formed an imbalance?
No. We imbalance. I don't know if you've watched the lesson on imbalance. Imbalance takes place between three successive candlesticks. So candlestick 1, 2, 3. In a bearish market, we look at the low of the first candle and the high of the third candle to determine if there is a gap between them. Then that means there is an imbalance there. If there is no gap, there is no imbalance. I think you should watch the last, that should be, I think, lesson 15 or 14, where we looked at imbalance so that you understand. Every lesson I have taught is linked. So if you miss one lesson, you won't understand the other ones. Okay.
Thank you, sir.
You're welcome. All right, so over here, I was talking about this guy. So if you look, this is the tail of this candle. This guy is within this. Okay, this guy came to mitigate this guy. All right. So it broke the low, came back to mitigate this guy. So this is not a valid order block because we can't find any imbalance here. This guy mitigated the low. This green mitigated the low here. But this guy didn't take the high here, so this is not an order block. So we move on. This is our next order flow. Okay. So within this order flow, we have to look for our order block, our last buying candle. So in this case, this is our last, because it took the high here. This is our last buying candle before the sell. Remember, once again, color, candle color doesn't matter. All right. So now, this guy took the high, which is the liquidity over here. Then we push down. Now, candle 1, candle 2, candle 3. So we have an imbalance over here. So this is the imbalance between this candle and this candle over here, which qualifies this guy as an order block. So this is our next valid order block. And we can see market comes back, taps into that order block, and market push down. Right, this is our next order flow. So let's look for our next valid order block within this guy. Okay, so here, let's see where is our last buying candle. Let's see if this guy has broken the wick. This is equal high, so it hasn't broken the wick. So this red candle is within the shadow of this guy, but this green candle took the high of these guys. Okay, so it has swept liquidity over here. So this green candle becomes our last buying candle before the downward move. Now, between the low of the green candle and the high of the third candle here, we can see there is a gap. So that is an imbalance, making this our next valid order block. Now I don't mark order block if I don't see imbalance, if I don't see liquidity being taken. I love to trade only when I love to use an order block only when I see these two factors being qualified in the criteria. So this is an unmitigated order block, which if market mitigate, you can, if market return there, you can be looking forward to trade from there. Then this is our next order flow area, and we can look for our valid sorry, look for our valid order block from here. So here, this is our last buying candle, took liquidity, but then there is no imbalance here. So who next is this guy? Let's see. Over here, it took the high of this guy, this green candle. So this is the last buying candle before the sell momentum here. So this becomes, because there is an imbalance also over here between them, so this area becomes our valid order block. We can see price push back into that order block and market push down. All right, so I think we have enough for the bearish. Let's see some examples for the bullish. So with the bullish, I'll start from this area here, this area. Then this is invalid, so let me take this. This is a valid. So we start from here. So over here, let's see. So this guy here took the low of this guy. Okay, took liquidity out over here. Liquidity taken. This also having imbalance between this guy and this guy over here. So this becomes our valid bullish order block. Remember, always trade from unmitigated areas in the market. Now here, price took the low of this guy, but this guy is not a valid order block because there is no imbalance over here. So we move to the next order flow area. Yeah, Emmanuel, you raise your hand. You can unmute yourself and ask your question. Okay, if you don't have question, let me continue. All right, so here, what is our last valid order block? This, let me delete this. Yeah, Barry.
Please, sir.
Yeah.
Let's assume that we are having a live market.
Okay.
And this we are treating this order block. Is it that in the process? Is it that it has to form before you know it's an order block, or when you get to this juncture, you get to know that no, this place an order block will be formed here?
Your distance is giving me feedback, so I'm not able to hear what you are saying.
Hello, sir.
Yeah.
I said it.
Okay.
The order block.
Yeah.
If we are having a live market, and is it the order block now? Will it form before you get to know that it's order block, or in the process of forming, you get to know that this place an order block will be formed?
No, other blocks will have to form. They have to form for you to be able to identify them.
Okay, sir.
Yes.
Thank
So
you.
sometimes market can go very far from the other block before returning. By then you have identified, for instance, this one. Look at the time market returns back to this other block here. To this other block here. Market went far. By then you are able to determine your valid order block before market even comes down into it. But it's not just about identifying other blocks. There are other factors that you'll be looking at, like liquidity, uh, market taking, inducement above or below before tapping into your zone to make entry. Then we'll be looking at the entry types. We'll be using something called single candle, order block entry, uh, flip zone entry, and all those stuff. So we are gradually moving. So sometimes if I am taking the lesson, that's why I say you don't need to miss a lesson. Otherwise, you will be asking me about what we have done already. You get it? So if you are late, make sure you watch the previous lessons before coming to the new class. Okay, guys? All right. So this our next valid order block. Why? Because this guy took the liquidity over here. Okay, the low in this pullback, and then push up. Okay, then there is also this little imbalance here between this guy and this guy, so that qualify it to become a valid order block. Okay, all right. So our next order valid order block is found within this valid order flow over here. So let me delete this. Now this guy here is our order block. Why? Because it took the low of this guy over here, making it valid. Making it valid. Okay. So you mark from the proximal to the distal. You can see price taps back into it and push up. Where is our next valid order block? Is within this order flow. As you can see, this guy took the low over here. So liquidity grabbed. And this is so powerful on the daily time frame. Like if you want to really know a lot of swing positions on the daily time frame, you just go on to, if you guys think this is a joke, just go to daily time frame and look at anytime candle takes one candlestick takes the previous high of the previous candle, the next thing you see that there will be a lot of selling candles before the next pullback. If it takes the low, you like to buy for some time before continuing a sell or something like that. Well, these are just few things. All right, so this guy here, despite faking the low over here, we don't have a valid um, order block here. Why? Because here you can see that there is no imbalance for us to make an entry here. So let's see. The next thing is this area. Why? Because this guy took liquidity over here. Liquidity, yeah. I think let me zoom in for you guys. So this liquidity. Then let's see, is there an imbalance? Yeah, there is imbalance between this guy and this guy. and this guy is within within the inside of this red candle. So these are valid, next valid order block. Now let's see where is our next. Here like this guy has not been tapped into yet. Okay, price didn't return into this area. So on AUDJPY, like for instance like this, I'll be looking at this area, this H1. Okay, but then I won't. If I was to do my analysis from the higher time frame, then I can confirm this as maybe looking at that area for future buy. But right now, if I say that, I'll be saying that with less confirmation, okay? Because I'm only doing this example on H1. I'm not doing full analysis, okay? All right. So here, market didn't tap here. So this is an unmitigated valid order block. So the next thing you do is you look at this order flow area to see if you get a valid order block. All right. So here, this guy here took the low here, but we don't have any imbalance because this guy has mitigated it. Then this guy here took the low of this red candle, but also there is no imbalance, so we don't have it. But this guy took the low of this guy here, and also we have imbalance between this guy and this guy. So this is a valid order block, which market has already even tapped into and is moving up. So as you can see, with ICT, if it was the ICT guys that were marking, despite not looking out for the imbalance, they would have marked this last guy. Some will also mark this whole area here as their other blocks. But other blocks, candle color doesn't matter. It is rather you looking for the points, the major points, imbalance, liquidity sweep. So here, as you can see, we swept liquidity here, and price is moving up. Then price taps back, imbalance field, price taps into our POI, and then market is moving up. Please, any question before I end lesson 17? If you have any question, unmute yourself, ask your question, and we will end the lesson. Or you guys are okay?
Yeah, for me, I'm okay.
All right. Yeah. Any other question? If you have a question, if your microphone is disturbing you, you can type the question quickly so that we look at it before we go. All right. So we are gradually getting closer and closer to the deeper things. Okay. So it means you need more practice. A lot of you are telling me to finish quick. It's not about finishing quick. It's about how you get a concept. But the whole thing too is that even after we finish this boot camp, I will still be doing videos and uploading them to the channel, trying to polish most of the things that I taught you, because day in, day out, we look at new happenings in the market and becomes an addition to the concept. Okay, we could add certain things. Yeah, Emmanuel.
Good.
Yeah,
Sir.
I'm listening.
You said that in order for
other block to be it have to be taking the previous. That is when is and taking
other block to do what?
the previous can strip when it's going to the low.
That's when we are in uptrend. We are looking at the lows to be swept. And when we are in the downtrend, we are looking at the highs to be swept.
So why is that? And they have an equal high, and still,
come again.
I'm saying that so and they are all equal.
Which one is saying they are all equal?
I mean, uptrend.
If they are all
equal,
if they are equal, is invalid.
And still have
and still have what?
Imbalance.
Is still invalid as long as it didn't take liquidity, because equal high is a type of liquidity that we'll be looking at under liquidity.
Okay.
Yes, we call them retail liquidity. You see this area, retailers will see it as this area as support. Resistance. I'm trying to mark this. Retailers will see this area as resistance. Okay, this area here as resistance, so that they'll start selling. And you see, once they start selling over here, buyers will come into the market and take all their stop losses above here and push the market in their direction. You get it? So we use this to determine liquidity. So it's a type of liquidity we'll be looking at under liquidities.
Okay.
Yes, please.
So have to break
Come again.
I said that other the market structure.
That's to take it has to sweep liquidity.
Okay.
When we finish everything, there is one topic called putting all together. That means you do the analysis using all that we have learned. You combine them. This one like this, I'm only showing you how you identify the things under each topic, but I've not shown you how you combine them. But you can still combine them by following everything we learned from lesson 1 till now. Yeah, Laurentia.
Yeah, Prof.
Yeah.
Please, which time frame is
Which?
this frame?
Okay.
It's best to be marking your other stock and those that is that so far.
Well, that depends on the type of trader you are. Okay. If you are a swing trader, you have to mark from your higher time frames of either weekly, monthly, or daily time frame. Okay. If you are a day trader, you mark from the daily time frame, H4. Then if you are a scalper, you mark from H4, H1, M30. You make entries on M15, M5, and 1 minute.
Okay. Thank you.
You're welcome. Please, any other question? All right, so if there's no other question, I'll call it a day. I'll see you guys next week. Next week is likely we will meet only twice because I'll have a busy week, so we might meet only twice. Our usual either Tuesday and Saturday or Thursday and Saturday. So whichever one it will be, I'll tell you on the page. Okay. So have a nice evening, everybody.